What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. So I had some technical difficulties. My phone needed an update, and without that update, the screen recording software was really buggy. Sound was lagged, or there was no sound at all, so I had to postpone the video, but here we are, and I appreciate you for being here for real. I appreciate all the love that the YouTube channel has been getting recently. It just blows my mind, you know what I'm saying? I'm just glad to be here and be able to offer some sort of help to somebody out there, okay? So today we're going to be looking at Wednesday's trades and Thursday's trades. These were the only trades I took this week. I was able to stick to my plan and only take what I thought were the best trades. So here we are. On Tuesday, on gold, we had a first red day, signal day, potentially, right? Now, as you can see by looking at this chart, which is the Wednesday chart from gold, we did not get that clean, crisp first red day follow-through trade like we might have expected, okay? But because we had the first red day, I came to the screens looking for shorting opportunities, and I was able to capitalize due to that fact, okay? So looking at this 1 minute chart, you can see I have marked off the high of the day, okay? And when we have this news release at 8:30, you can see that it spikes up straight up to the high of the day level, right? And then begins to fall. So there, I was expecting that first red day follow-through trade. So I was able to enter this market. You can see, not here, but when we broke through this bullish candle, I got in there, put my stop loss above the wick of that candle, and I did not have a concrete target in mind. I was monitoring this trade as it was going on, as it was happening. So I was able to close when I felt comfortable with closing, right? And I held through that pullback because I was expecting the first red day trade, all right? And it just so happened to work out for me, all right? Now, later on in the session, 10:30, 10:45-ish, right? I took another short position. We had since pumped back up into that news release candle and then started to reject. And I entered this market as soon as we broke through this bearish candle, stop loss up at the highs, and the same deal. I just monitored this trade until I was comfortable with exiting, which was after this little W formation down here. I decided to take that out, okay? Part of the reason why I decided to close those trades was because each one netted me about 50 pips of profit, okay? So I was fine with taking 50 pips out of the market on each of these trades. That's why I exited, all right? On to Thursday, we had an absolute banger of a trade on the DJ30, all right? Here we're looking at a 5 minute chart. We're looking at Wednesday and Thursday on the DJ30, okay? The days are separated by these vertical dotted lines. I stuck to a simple daily process of marking off my high and low of the previous day, okay? And now I want you to see this. We dump, coil, pump, right? That is one of our sort of meta templates that we're looking for. Dump, coil, pump, pump, coil, dump, this sort of thing, right? So you can see that we have a high, a low, and then a consolidation. Going into the new day, we have a very narrow range, Asia and London, okay, until we get to New York, which catapults to the opposite side of the range. All right? You can see Wednesday was the same way. We have this very narrow range through the first two sessions of the day. Spike to the top for a trade down low. Over here, we spike to the downside for a trade up high. All right? That's something that I've become accustomed to looking for on the indexes. When we have that big spike right at the open, I'm typically going to wait 5 minutes, 15 minutes to see what's going on, because very often we have a spike in one direction for the actual trade in the opposite direction, right? Which is what happened here. Now we're going to look a little closer on a 5-minute chart still at that Thursday, so you can see what's going on. We had, this was a very news-heavy week. We had 4 news releases scheduled right here at 8:30, and that spikes to the top side, spikes down low, right? Trading back into the low of the current day, and then going higher, pulling back, and continuing. When we look at this 1-minute chart, and this was not my actual position. This was my actual position. I just drew it on wrong in this slide. All right. So my target was actually the high of the previous day plus a little bit more. Okay. Right. So you can see here right at 9:30, this candle spikes back into these lows, right? Are we working the high or are we working the low? In this case, here's our low, here's our high. When we come to 9:30, what are we doing, right? We're spiking down against the trend, right? Stop hunt against anyone who went long in this area is trailing their stops. This takes out those traders, picks up those orders before the market continues to go higher. So I have my stop loss right below that wick, 1 bar stop, target just above the high of the previous day, and that trade was an absolute monster. Okay. I also traded gold on Thursday. This was a mess of a trade. Okay, just a complete mess of a trade, and I'll tell you why. Right, you can see here, and excuse the sounds of nature out here. Okay, but you can see I've marked off the low of the previous day. And in the gap time, the London, New York gap time, we come down, break through the low of that day, trade back into that range, trade lower again before catapulting way up here through these London highs. This is a news release. Again, we had 4 news releases scheduled here. This news release spikes to the downside, putting in a new low of the day, and then going straight back up here, okay? Then we pull back into that news release candle. And once we got this big wick right here, I decided to get in. I just wanted to secure an early entry. I was pretty confident in my directional bias, right, that we were going to be bullish. Now, the thing is, you can see I put on here, here's my actual target. Here was my actual exit. This was a very poor exit, and that is due to poor trade management. All right, I put this position in and I put this position in on the DJ30, and I went back to sleep. When I woke up, my take profit was hit on the DJ30, but I was still in this trade here, right? So when I woke up, we were falling back down like this, and I just decided to take the money off the table instead of, potentially having it come back and stop me all the way out, right? So I just took the money because it was there on the table. Plus, I already secured a great win on the DJ30, which was really all I needed to make for the week. So I just shut this trade down, but I could have managed this position better, right? But like I said, I went to sleep, so I wasn't really paying attention to it until I woke up, right? So fortunately, it still sort of worked out for me. It was a little over a 1-to-1 RR trade, okay? But those were the reasons that I took these trades. These are the trades that I took. And I would like to emphasize, you need to stick to this daily process, okay? A lot of traders think at some point they're going to have some grand aha moment, and it'll be smooth sailing from there. But that's not really how it works in trading, and that's not how most things work in life, all right? For example, I became a barber. I graduated barber school, and I thought that as soon as I graduated, I was going to be out here making, $60,000 to $100,000 a year cutting hair. But that just hasn't happened, all right? That just hasn't happened. It's hard to build a clientele I'm not as skilled as some of these other barbers out here that are making that much money every year. So I still have a lot of work to do. And the only way I'm going to get to that point is if I show up every day and do the same things every day and continue to improve. You understand? And trading is the same way. Don't put a time limit on your trading success, okay? Do not give yourself a deadline. This takes time, okay? We need to grow our accounts safely, right? Safely, comfortably, and consistently. You understand what I'm saying? So later on this weekend, I'll have a more psychological talk type of video coming out for you. But I hope that you enjoy this video. I hope it makes sense. I hope you had a great trading week. All right, next week, hopefully, we'll get these same types of opportunities, but we need to commit to that daily process. Go on your charts, look for signal days. All right. Once you find a signal day, you can check and see if you have a potential day 3. All right. And once you see that, now you have an idea of what you're looking for when you come to your charts. Just like I was saying with this first red day on gold. The only reason why I was able to capitalize on these trades is because I had an idea in my head. I had planned on shorting gold, so I was looking for shorting opportunities. And when they presented, I was able to take them with very little hesitation or fear or anything like that, right? So we need to stick to that daily process. Hunt your signal days, choose your setup, figure out what setup you're going after, and don't trade anything else, right? Anyway, man, until next time, I hope you continue to free your mind.